Welcome back to Smart Money. We're doing a deep dive into hybrid funds and why it's a good thing to perhaps consider it as a part of your asset allocation, as a part of your core portfolio. We have with us Dinesh Balachandran of SBI Mutual Fund and Bhavesh Jain, the co-head hybrid solutions at Edelweiss Mutual Fund. Dinesh, let me come to you. You know, we spoke a lot about hybrid funds and why people should look at it. You manage two hybrid funds at SBI Mutual Fund as well, which require moving between multiple asset classes, which is the SBI Balanced Advantage Fund and the Multi-Asset Allocation Fund. Now, can you tell us a little bit more about how you move through asset classes at a time like this, right, where there is a possibility of an interest rate cut beginning perhaps in the next few months from the US Fed? Equities are at an all-time high. Which are the asset classes that look good to you at the moment?
Yeah, so let me briefly walk you through the process behind the SBI Balanced Advantage Fund. The asset allocation framework for the SBI Balanced Advantage Fund is based on three factors: valuations, sentiment, and earnings. When we look at the valuations, so there we are comparing valuations of equities versus fixed income. And there we are clearly witnessing that equities look much more expensive compared to their historical averages and relative to fixed income. And from that perspective, if you have to just think about markets from a valuation perspective, clearly you would want to sort of be underweight equities at this point and be overweight fixed income. Now, but valuations do not explain it all. And that is where the sentiment piece and the earnings piece comes in. Market sentiment is an in-house proprietary index where we essentially track various factors. And we are broadly trying to gauge, are investors in general optimistic or pessimistic with respect to equity markets? And there what we are witnessing is that compared to March of this year, where investors looked a lot more pessimistic, clearly the needle has moved a lot towards the greed part of the spectrum, but it hasn't reached an extreme yet. So from that perspective, sentiment is bullish for equities, but it's not at an extreme level. And then the third part is the earnings part, where we are essentially seeing that there is a possibility of earnings deceleration going forward. So when you put it all together, our equity allocation at this point is 50%. So we have in the Balanced Advantage Fund, we have 50% allocation to equities and 50% allocation to fixed income. And this is less than the neutral allocation. Under neutral circumstances, we would have 60% allocation to equity and 40% to fixed income. Clearly, because of the valuation part and the sentiment part and the earnings part, our current allocation is less than neutral.
Okay, what role does gold play in addition to equity and fixed income in this multi-asset allocation fund? I ask you because, you know, gold prices are now at what, 60,000 rupees, and a lot of people missed out on this rally, right, and still want to sort of participate but don't want to buy, say, sovereign gold bonds separately. How do they approach it?
Yeah, so this is where we have another fund, which is our SBI Multi-Asset Allocation Fund, where it is not just equity and fixed income, it is equity, fixed income, and gold. In my opinion, gold definitely is likely to play a non-trivial role going forward. Because when you think about last decade was one where it was broadly disinflationary. There were bouts of inflation, but they were just spikes, nothing more than that. But my suspicion is this decade is going to be a lot more about inflation. There is a non-zero probability that we might have a stagflationary-like scenario. And if you think about one asset class that does well in such a scenario, it's not equities, it is not fixed income, it is gold. And from that perspective, unlike what we saw in the last decade, where practically speaking, no one really needed gold, and gold actually didn't do well at all, right, broadly speaking. In my opinion, the situation is changing. And from that perspective, having a bit of gold in your portfolio is a perfect hedge for this stagflationary-like scenario, where I'm not saying that will be the base case scenario, but it is a scenario that you don't want to completely wish away.
Okay. Do you agree with that, Bhavesh, that, you know, this is a great way to perhaps get multiple assets in your portfolio? And how are you positioned now, given that the market is sort of volatile, little bit volatile at this point in time, and we could be heading into a rate cutting cycle?
As Dinesh pointed out, they have a different model. Each Balanced Advantage Fund have a different model. If you look the model which Edelweiss follow, which is Edelweiss Equity Health Index, our model is more on the basis of trend of market. Okay. And right now, equity trend is extremely positive. And that is the reason our Balanced Advantage Fund today is running almost 70%, close to 70% equity compared to, there are other balanced advantage fund at 40 and 50% equity also. So as I told you, till the time, say different models have different way to, you can say, participate in this equity journey. Someone will be looking at valuation, someone will be looking at trend. But finally, it doesn't make any difference till the time we are able to solve the purpose of getting better risk-adjusted return over a, say, reasonable period of time. I think clients should continue to look into this category. Particularly today, when, say, on one hand, valuations look stretched. On the other hand, when you look at geopolitical situations between Ukraine, Russia, US, China, things are not that great. Again, inflation has started making, you can say, some, you can say, uptick in India also. We see price of some of the vegetables. At the same time, crude is back to 85. So looking at all these things, I think it is still a time to stay invested in hybrid funds, wherein if this upside journey continues, we will be able to give you a decent participation. But if at all market takes a U-turn and we see a fall, we will be able to provide a decent protection compared to a normal equity fund.
Okay, Dinesh, there are aggressive hybrid funds and there are conservative hybrid funds, right? In this market cycle, what do you think retail investors should choose?
Yeah, like again, you don't want to have the same solution for everyone, right? And it's sort of a trite statement, but I think it really boils down to the risk profile of the investor.
So what is the difference, if you can explain to our viewers?
Yeah, if someone essentially has money in a fixed deposit and is sort of thinking that maybe I want a bit more returns, particularly on a tax-adjusted basis, but I do not want to see like a 10% correction in my investment, you know, where I don't want to see anything that looks like a double-digit kind of drawdown. For these investors, a conservative hybrid fund makes a lot of sense, because in a conservative hybrid fund, you probably are going to have somewhere in the 25% range allocation to equities, and the remaining will be in a combination of fixed income and arbitrage depending on the fund. In such funds, the drawdown profile is not going to be very high. You will see some correction if the markets tank, but it is not going to be so significant. And so for investors who are very much worried about seeing a drawdown or a correction in their investment, they should start off by investing in a conservative hybrid fund. What is the trade-off? The return, while it will be higher than what you get in a fixed deposit product, is not going to be as high as what you might get in a more aggressive hybrid fund over a medium-term time frame. So always there is a trade-off. The higher return that you're likely to get in an aggressive hybrid fund comes with a higher risk profile. So the question someone has to ask themselves is, am I putting this money in for a shorter time frame, or am I putting this money in from a medium-term time frame? Medium to longer term time frame.
Sure.
Am I going to be worried when the markets tank and I am thinking about taking money out? Or am I going to say that, you know what, this is part and parcel of the journey. It's no big deal. I'm going to be okay. So once someone answers these questions, automatically the solution sort of presents itself.
Okay. We don't have too much time. So Bhavesh, let me end with you. What type of investors are investing in hybrid schemes? Who should invest in hybrid schemes? If you want to just wrap it up for us.
Yeah, again, very interesting question. But the main point is, it is not a tactical solution. I think hybrid should be part of each and every client's core portfolio. So a fresher who is coming into equity market for the first time, as well as a seasoned player who is there for last 15, 20 years, both of them have different kind of hybrid products which they can have in their portfolio. So those who are very conservative, there are funds like arbitrage fund, equity saving fund. Those who want to have different asset classes in their portfolio, then we have multi-asset allocation fund. And those who are looking to play, you can say, long-term equity journey, then we have fund like balance advantage fund and aggressive hybrid fund also. So it is a product which is suitable to each and every client depending on his risk and return profile. He can pick and choose which product he wants. Earlier, this category was very small and people used to think that it is just a parking instrument, and people used to look at hybrid only at the time of volatility or maybe a big rally. But now I'd say this category has proved time and again that it is no longer a tactical allocation. One can have at least 15, 20, 30% of his portfolio across hybrid fund at all point of time.
Okay, gentlemen, we've run out of time. Thanks a lot for joining us and explaining the do's and don'ts of hybrid funds. With that, it's a wrap on this edition of Smart Money. Have a great weekend.